Bad news for some of you guys today. A place that I'm a big fan of. I first went there, I guess, around 2011, something like that, and have been a fan of ever since, and happens to be a pretty attractive place for nomads and for people looking at different places to relocate, etc., has just announced that they're changing some rules that will make it arguably a fair bit less attractive, and this is Thailand. So we're going to dive in today and discuss some new announcements that they have just fairly recently here and talk to you about what the changes are, what is unknown about the changes, what that might mean, what you might do about it. So let's dive in. Before we do, if you haven't already, please hit the subscribe button, hit the all notification bell. Thank you for joining us. It is our pleasure to have you here. Thank you very much. If you are new here, I'm Michael from Offshore Citizen. We are some of the foremost international tax experts in the world, and we help people with relocating abroad to other countries, getting residencies and citizenships, building Plan Bs, setting up their companies in other countries, doing international banking, etc. If those are things that are interesting to you, please reach out to us. You can book a call with me, calendar.com/Michael-Rosmer. There's a link in the description below. Okay, so Thailand. Well, here's the deal. Historically, Thailand has had this really awesome thing in terms of how they do their taxes, which is they have this quasi-territorial remittance-based system. What does that mean? What that means is that if you have certain types of income, most notably dividend income from abroad, and that income is paid out to you to a foreign bank account, not brought into Thailand, so not brought into a Thai bank account, not spent in Thailand in the year that it is earned, it was not taxable. Now, there's little nuances you can get into. People might say, well, hang on, what about permanent establishments and things like this? One of the good things about Thailand is Thailand, and so there's certain things that you're probably not going to have any issues with. They also don't have CFC rules, they don't have management control rules. So there's a bunch of things that have made it pretty attractive in that regard. Unfortunately, what they have announced is they've said they're now going to tax worldwide income. So even if you don't bring money into the country, they're still going to tax it. Now, what's unclear about this is whether all forms of income will be treated equally. So there's been some talk about crypto earnings and things like this. I've always had clients treat crypto earnings as being locally sourced because that's the norm around the world. So the way that it works typically is that when you have capital gains from the sale of shares, bonds, etc., securities, they're generally considered sourced where you are, not where the asset is. And so as a general rule, we ostensibly tend to treat crypto the same way. So if you sell crypto, it's deemed to be sourced where you are. And so I wouldn't consider it to be foreign income. And so therefore, I would throw it under the crypto tax regime in Thailand. So the exception that might come in, and we're going to get the details over the next little while, there may be some different treatment on dividends. That could be the case. We will find out. It might not be. And in that case, hey, you would be taxable on your full income as a resident of Thailand, which, okay, I mean, that means that potentially your tax rate would be fairly high. Now, good things are, again, they don't have management control rules, they don't have CFC rules, so potentially you could leave the majority of the money in the company. However, it certainly restricts your ability to bring money from the company into your personal name and then, a year later or something, go and buy some property or, live an expensive lifestyle or whatever. So obviously you can still come in with what all money you made beforehand. That's good, positive sign. And you can certainly be in a situation where you could accumulate money in some sort of legal structure and then you could leave and you could possibly cash out. That's an entirely possible structure. But a lot of times people really like Thailand. And often I find they're establishing themselves there and intending to be there long term. So this may make it a less attractive place for many people. There are still many ways to use it, and certainly, it's a fairly easy place to get visas, and you can definitely live part of the year there, and on and on and on. But this is definitely going to be a negative thing. So if you're interested in finding out more about how that might apply to you, and if you're in a situation that you should take advantage of making some changes in terms of your overall strategy, how to optimize with the new rules coming in, understanding the rules, etc., please reach out to us. Again, you can book a call with me, calendar.com/Michael-Rosmer, link in the description below, or send a message through offshorecitizen.net. Hope that helps, and I will see you guys on the next video.